Good morning, happy Tuesday. Welcome to Eurotrade. I'm your host, Marcus Stalker D. This is Pete the Process Parrot, and today I thought we could both tackle the issue of how to create a good intraday trading plan, and Pete is going to be watching over me and pecking me if I do a plan that involves flipping and flopping around the same level. Okay? All right, let's share the charts and see what we have today. I see that gold is nicely going into a bit of a sell-off. That is not the right screen. There we go. Okay, let's make this full screen. That's better. Okay, so first things first, whenever I'm preparing for the day, I spend a good deal of time just orienting myself, right? So rather than immediately jumping into positions, I want to see where my levels are and how the price is actually behaving around them. So we're going to have a look at gold and we're going to have a look at copper, maybe even take a little gander at some energies, because we are coming into the time of the year where the energies kind of start experiencing some more demand naturally. If you're new here, I have been trading for 18 years, so I'm not a kid, even though I look like one, but I'm actually a little bit older. So out of those 18 years, I've been trading for various prop firms for 12 years now, coming up to 13. I am seriously qualified, but I'm not a CTA, so therefore this is all still for educational purposes only. Please familiarize yourself with the disclaimer that Bruno posted earlier on. All right, so let's use. So I've already put the charts on the micro gold, and I'm just going to take you through my process. So the very first thing that I want to see is where the Asia high and low are located. Now, usually I like to do this closer to the LME open, so I will take in the overnight range instead of just the Asia range at that time of day, but let's work with what we've got at the moment. So we have the Asia high up at 38.99.3 on gold. And the low, which we are actually breaking through at the moment, the Asia low was at 38.54.4. And this is something I do to any product that catches my eye on the day. The next thing is I want to have a look at where COMEX value area is. What's the value area? It is the distribution curve for the previous day session. Now, I take COMEX because according to some of my stats, over the last 12 years, COMEX outer edges of value can actually be very, very reactive, especially when you're coming from them, at them from the outside. So this is why that's important. COMEX value high is 3860.3. So I'm going to change this to purple. And the value low is at 3851.3. Now, the next thing that I look at is the quantitative extremes, average daily range high and low. I also have a way of looking at average session range, high or low, and then I will basically wait until some of these levels are touched at the very least and how the price behaves around them. So ADR high was actually located a little bit higher than this, but whilst I was preparing, we had this very nice dip on gold. And that move, this mean reversion down to COMEX value, actually exceeded the ADR low, which was located around about the same area as Asia low. So this is why on this other chart I have two sort of slash textual references. Now, what can happen if we keep seeing this increased volume to the downside is that at some point you can expect a test of the COMEX value low and then a continuation. So that's definitely one hypothesis. Let's remove the old areas. Once I've done this very basic analysis, I will then look at what the options chain is doing. So the option chain is definitely something to keep an eye on because the market makers very frequently will use the open interest from the option levels to do their hedging. Contrary to popular belief, market makers are not some big bad wolf. They just want to maintain delta neutral state. And that means if we are in, let's say, a quieter period of time, even though you might have a trend on the way, basically you can still see this hedging activity. But if the trend is not super crazy and we're not just smashing through all the levels with no mercy, that's typically a sign of a positive gamma environment. In a positive gamma, we expect some of those options open interest levels to act as stabilizers. And I really only focus on the biggest ones. That would be gamma walls, put supports, and GEX 1, 2, and 3. Sometimes if we have a gamma flip area, which is like HVL, high volume level, that can be a level of interest too. But in the simplest terms, if you're above the HVL, that means you're in a positive gamma. If you're underneath it, it's negative gamma. But it's not quite that simple, okay? All you need to know at the moment, so, I don't want to confuse anyone, but basically is that most of these open interest levels from the options chain can act to at least slow the movement down a little bit. But if you are really in some crazy volatility environment like we've seen during the tariffs announcements, then you can expect those to just be accelerators. Why? Because in that kind of an environment, market makers actually have to keep rushing to keep selling or keep buying with the movement, which then amplifies everything. And this is how you get some of those exaggerated moves. Is today super crazy? So we have NFP on Friday. NFP weeks can be a little bit odd because they tend to bring these like unwinding moves since the institutions will be positioning themselves for the major release. NFP is one of the biggest releases that you can possibly have. And I wouldn't be surprised if we do see some of those unwinding moves in general. Now let's do the same for copper. Copper Asia high was created at 491.40. And I need coordinates. Now the Asia low is just being touched here. $87.50. And again, if we are trading closer to LME and COMEX, I will take the entirety of that low. So rather than just it staying where it is right now, I will actually move it down to wherever the low is at that moment and then look to see whether there is a smash through that level and a reversal, which is typically followed by an exhaustion candle. Oh, Tom says no NFP if government is shut down. Are we in government shutdown at the moment? Tessanik says, hello D, I'm a developer. I'm able to easily get historical open low close value data for backtest. Do you know if it's possible to access Greek's historical values somewhere? I'm sure there will be services that offer that. I have not used any Greeks in my bots, but I'm sure there will be services that offer that. I can't imagine they will be particularly cheap. You know, tick data itself is not particularly cheap, so I can imagine options chain is going to be even more. But you know that, so yeah, I can't unfortunately point you in any particular direction. For options levels, to me they're more discretionary, because I definitely don't just go, oh, GEX 2, I'm definitely going to go short or long from there. I like to see how they relate to the rest of the data points that I have. And for the bots, I just keep them very simple. I keep them to volume, and I keep them to levels and some patterns around that. I don't like to make my bots overly complex, because in the past that has not really worked very well. Anytime you put too many conditions, and what's too many conditions? Anything really over 5 conditions, to me that will be a bit of an overkill, and perhaps even an overfit. So if you have just the Greeks, maybe that will work, you know, as a just like an overview of where the market makers will hedge. But for most other situations, it's a little bit tricky to implement that. That's just been my experience. So yeah, but I'm sure there are companies out there that will offer that data for backtesting. Maybe look at QuantConnect. That might be one of the. Actually, now you've got me interested. Now you've got me interested. Yeah. Tom says the government shutdown didn't happen yet, but expected from what I understand. But who knows? Yeah, exactly. Didn't they threaten with the government shutdown just like a month ago? So I don't know. Until it happens, I'm gonna count as if the NFP is actually going through. So yeah. Why did I put that as ASR though? Okay, 750. Now, when it comes to my bots, just looking at this Asia range is a bit tight, because the setup that I have for the first part is to effectively get at least 30 points of space until I can take profits. Now, with the Asia ranges on copper, they're pretty small. Like the whole overnight range was only barely 38 points. Don't know whether I would like to get involved in a trade where I barely have 20 points to work with, because my bot on HG, it counts the 50% of Asia range as a target. So I don't actually look for a full rotation, because in my backtests that just doesn't, both manual and actual backtests, it doesn't happen frequently enough. But the 50% of rotation definitely happens. Now on gold, it's a little bit different. You can expect 75% of the range, even 100% if it's on the long side, because that is the trend that we're working with. And that is the human factor that you always have to introduce. I mean, I suppose you can read the trend through, I don't know, maybe RSI on the daily or something. But even that can have its problems. So I prefer to keep that as my own sort of quant strategist, decision maker moment. All right, let's have a look at COMEX value high and low on copper. 91.10 is COMEX value high. And just give me a second. My Cavalier wants to come in, and he's deaf, and yet my Pomeranian, who's the wifey, Doesn't quite get that. She seems to think that I'm the deaf one, so just give me a second. All right, the regular co-workers are here. So I have 1, 2, 3 of them. I have Bon, I have Leonard, and I have Bernard, the black and tan boy, on the chair. They are snoozing the morning away. All right, comics value high, basically just around this price, 86.70. So all pretty bunched up into one tight area on copper. Don't know if I want to see that. So, you know, do we want to trade when there's clearly a distribution somewhere in a very tight range? And where are the average daily ranges? So let's have a look. Average daily range high, quite far away, 96.50. And average daily range low is at 80.90. Okay. But I would need some sort of a movement to happen here. Because, yeah, if this is a distribution on copper, then we may have some space to go all the way down to ADR low. And that would mean going basically below the value low, then touching the value low, and then carrying on downwards. There is a swing extreme on a higher time frame that I'm seeing. So here's the swing extreme. Let's make that bigger. This is the 4-hour chart. And whenever we have a massive smash down like we had, you know, a while ago in July on copper, so this is what we're working with, that's the whole area. And I did say there is a decent chance that we kind of pushed through it yesterday. I'm still of that opinion. Whether that's today, given the fact that we are distributing right underneath previous week's Thursday. So this was 25th of September. That was the day's high. And we never even got there. Is that a sign of bulls? Don't think so. So I'm a little bit, just a touch bearish based on this situation. And let's try and make some hypothesis on the basis of all of these levels. So the first one would be a neutral day, boring day where nothing really happens. That would mean we will be trading inside the already established range that we had for Asia, maybe looking for liquidity grabs above and below this area. So that will be hypothesis number 1. Range day, playing around Asia extremes. Okay, that's 1. The second choice would be if we break out to the downside and then carry on. What would I need to see there? Well, I would definitely need to see, first and foremost, for the strongest bearish sentiment, that we open a little bit below the COMEX value area. So hypothesis number 2, open below COMEX value low, retest value low, and then reverse from it. The third hypo, I'm going to maybe go for, because this one effectively banks on a continuation down, right? So it needs to get out of this range. If it happens, and for whatever reason I'm not in on it, I want an alternative. Now, with the higher time frame outlook on copper, I do think that we have some space for further upside, but maybe from slightly lower down. So I'm going to use the ADR low for that. Therefore, my hypo 3 will be average daily range low tests. Maybe a smash through it, but then a nice reclaim, followed by good old volume at the correct time of day, and then to carry on higher. And I also want one of the setups to account for me maybe not catching the break to the downside, and let's say we just have a fake out, come back into Asia range, go all the way higher, and then break out, because we still have lots of space until we hit the average daily range high, which is all the way up like 1%, and it offers about 52 points. So about 100 ticks to the upside. So where do I want to get involved? I don't want to try and long from this area and then hold it for a break, because this is all range bound. So to me, I would want the market to clearly break outside of all of this, maybe even smash through this previous Thursday high. But certainly if we start to go above COMEX value high and the overnight high, I might want to pop it along. And that would be my fourth hypothesis on copper. True breakout above Asia high. So now that I have those four, and I don't carry on, I don't go hypo 5, hypo 6, hypo 7, hypo 110. I only need 3 or 4 of them. And I need those to be at different price points. That way, each level has its own direction. So you're never in a situation of, oh, should I long or should I short? Oh, should I long or should I short? Because the day as it continues will tell you which one of these hypos you have. There are very few days when you will need more than 4 hypotheses. So I just keep them to either 3 or 4. And in fact, there's some days when 3 is all you need, really. But as long as you're not flipping and flopping, you know, if every single hypothesis is a line in the sand for you, either or, that's not a good plan. That is what is going to make you doubt yourself. And I would also urge you to create very, very clear outline of what you want to see effectively. And, you know, how will that look? Like, for example, for this true breakout, I know that I want to see volume building slowly already from the bottom, but I'm not playing that. I'm just looking for the build-up of momentum. If the run-up to the overnight high is all patchy, and it's not just all green candles that are slowly increasing in volume, I don't want to play the breakout, because usually it's that's a sign of you know, false hope, a false movement. And in that case, you're more likely to default to the hypo 1, which aims for this to be a range day, playing around Asia extremes. So the only, I suppose, flipping and flopping area, but in my eyes, they're so different, right? So one is followed by a true volume, the other one isn't, and it kind of gets haphazardly up to the overnight high. That's not enough volume typically to cause a true breakout. So therefore, in those cases, I will look for those exhaustion candles on a very low time frame, and then I will try and swipe it back the other way for a little rotation. And gold has a very similar outlook to me, but it's a little bit more extended, primarily because it's gold, and it has been crazy so far. So at the moment, I don't actually have any particular opinions on gold. I'm just still in observation mode, because I want to make sure that I get involved in a situation where it is all clear to me. So to me, whenever I'm looking for a setup, if the setup is not obvious, I shouldn't be in on it. That's just, you know, how I think. But yeah, it's certainly interesting to see pullbacks. Let's see what this looks like on the daily chart. Yeah, so that was a big pullback. But again, all-time high. So they went into another all-time high, then they reversed. Like I said yesterday, do I want to be that person who shorts the all-time high? No. But now that we had a decent pullback, if I get the conditions for one of the long setups, I would want to be in on that. So what sort of thinking do I have here? Let's do the hypos for gold, even though they're going to be reasonably similar. Very small COMEX value area from yesterday. So any sort of value acceptances, if we do get them, because of the strong uptrend, they will only be directional. I can't use the other side of value for a target because it's not big enough. So really for me, it will be COMEX comes, it opens, it accepts value to the upside. So it's value acceptance, but only as a directional indicator. Not as, oh, I'm going to run it from value low to value high. No. This is only going to be, you know what? Yes, we pulled back into the value area, but now we have this lovely Asia range that is pretty sizable. At the moment, we're sitting at 45 points. That's like 450 takes of Asia range. And I'm just reading that off my bot. I'm not doing math in my head. All right, the second choice is that we do have a continuation of the unwinding day. Given the fact that we've fallen quite a bit at the moment, don't know how likely that is to happen with gold. Because every time we go, oh yeah, maybe we're going to have more shorts, gold just kind of turns around and just goes back to all-time highs. So we have to keep the nature and the behavior of the instrument in question. But I do want to set hypos for that situation as well. So the second situation, kind of similar to this value acceptance, but it would be a little bit earlier because I would probably play that during or right after LME and into like sort of my midday. So, but it is similar to the value acceptance. What would I want to see? Similarly, I would want to see reversal and reclaim of Asia range. Okay. Now, it's feasible that as we get closer to LME, this low that we've just created, that will become my reference low closer to LME. Okay. So it's not going to be Asia low because that is not a part of the entire overnight session. So once I'm trading LME, I do use the entirety of, so whether Asia made the low or London low, it doesn't matter. It becomes a new reference point. So we're working with the market generated information to find the best nearest levels that we can take advantage of. But yeah, so it would be LME, new reference low, liquidity grab, and reverse. So same thing. And in that case, I will want to run this with the trend. So because we have an uptrend on gold, and I will actually ask it to rotate at least through the 75% of Asia range. If it starts to dilly-dally around VWAP, I will take that manually. But at the moment, you know, I am letting the bot do whatever it wants to do. Third hypo, some sort of a breakout, right? Either a continuation of this or a reversal and again a continuation. Would I want to be in on the long side if we break Asia high? No. No, to me that's way too high. It's a similar situation that we had yesterday. Sitting at all-time highs, going into some kind of a, you know, breakout. To me that is not enough profit margin. And looking at the way options levels are located today, we have the call resistance still sat at 3,900. So when that goes, the only thing I have from end of day levels last night is a minor GEX level at 39.25. So I would be very keen to just not get involved in that mess and to look for opportunities elsewhere. Now, the third choice, like I said, a breakout to the downside, that is something I might want to explore. So whether that's going to be from the test of COMEX value low in case COMEX opens below value and we don't do the whole exhaustion and LME doesn't bring us a meaningful reversal. So it's all very much how the price is going to behave at that point. I might want to short gold today, primarily because we're trying to unwind the positions. And on a 30-minute chart, you can see that this volume to the downside has actually been growing and growing and growing. So until that changes, I maybe want to stick away from trying to fade this move. So again, I don't know what's going to happen. I'm just observing objectively and not trying to enforce any biases onto whatever is happening at the moment. But yeah, the third one would be a breakout to the downside. However, I want to pull back to value low or Globex VWAP in order to make that profit margin a little bit more juicy and to actually have a better risk profile overall. Okay. Do I have a fourth one? I don't think so. I really don't think so. If we fall even further, to me, that would mean we are in an outlier day. So where is the difference between me wanting to run an immediate short like I'm planning on copper potentially? Because on copper, I'm not too against the idea to actually just keep going. But it's different. Why? Because we have the average daily range low on copper pretty low down. So that gives me the profit margin. What is going on with gold? Well, the ADR has already been done. So if we are truly in a breakout situation, you don't want to fade the outlier day. You don't. You want to, again, maybe look for single prints that are created on the way down, maybe use the little volume gap somewhere that gets created throughout the day and just go in with that area. We don't have that yet. So that's something that you can add to your hypos as the day develops. But would I fade this if we fall further? I would not, because the average daily range low is exhausted. So if you couple that with multiple sets of single prints that might happen at that time, it means that you are going against the outlier day and basically picking bottoms on a product that has a lot of space to the downside because of what it's done over so many months and years. So I would not be doing, average session range low reversal. That's not, to me, that's not a good choice on an outlier day. But if it's just a regular day where everything is still playing inside that range, fading those from the quantitative extremes is absolutely correct. All right. Prime says, this is kind of how I've been making my daily game plans. I've been trading so much better sticking to them. Yeah, absolutely. Prime says, the gamma levels help so much. Absolutely. They are an orientation point and they are pretty awesome to see what is happening. But I've seen some comments from people going, well, I'm just looking at these GEX levels and price just goes through them. Does it? Does it? Because even if it goes through them, you can then get a nice test of the gamma level and a continuation. So it's like, yeah, they ran through it because it's probably negative gamma environment, but then we retested that level and they hedged with the new direction. It's like, what are you looking at? But for me, I find them extremely useful, but only once I've done all of this, because this is like the basic data set, just, stuff that I need to have to know where I am chart location wise. And then anything after that, it's just me doing the best that I can to follow the hypotheses that I've created and to effectively just look for the price action evidence of those hypos happening. If you find that your hypotheses are never playing out, that either means that you're going for unrealistic hypotheses, like, for example, breakout play, and then going all the way past ADR low and rotating to some, lower area that's like a swing. That could work every so often. And one of the worst things that can happen to a trader is that they effectively go into an outlier day and they get a really nice run from that trade, and they then start to think that that's going to happen every single day. Quite possibly the worst situation, because you're not going to be having an outlier day every single day. So you need to know enough what has caused that. Like, is there a CPI release? Is there an NFP? Was there an FOMC? Is it NFP week? All of that will give you more of an overview of what market conditions we're actually working with today. And because it's NFP week, yes, there is a chance for an outlier day. Do I want to go against that as a mean reversion trader? I do not. I really do not. Not on gold. Copper, so-so. Copper, I think it still has some room. But at the moment, we've done a distribution and a reversal. So one thing that I think is quite bullish on copper, if we have a look at the 4-hour chart, is the fact that this supply, that was actually a decent quality supply. I mean, it doesn't have too much of a profit margin inside it, despite this move. But it was still a decent quality supply. And on the retest of the market shift point, which I call a conterminus line, which is effectively, let me grab a rectangle, just effectively here. The lower edge of this rectangle is where the market shift point is. So if we are in a really good quality supply, I actually don't want to see prices closing inside of them on that same time frame. If they do, to me, that's a sign of strength. Why? Because it means there are not enough orders sitting at the previous market shift point in order to keep the prices away from that area. So it's unable to stay away from the reversal point. And therefore, this is why, to me, I'm still kind of fishing for some continuation of this move. Where I'm going to get it and if it's going to be today, nobody knows. But I'm open. Like, I'm open for shorts and longs in copper today. So it just depends on how it all sets up. And on the daily chart, to me, this is fairly bullish. Fairly bullish. But we're still having trouble with that Thursday high. So we still haven't got even to that point. Once we get, if we get to a point where the market is holding firmly above it with no meaningful selling wicks, once we get to this low volume area from the big smash, that would be definitely a sign for me to go, okay, no more shorts. So just let's try and track through this low volume node. And volume profile, I only really use on large time frames. I don't really look at it on an RTH level. I look at TPO profile for that, but I will not be looking at like, oh, volume profile, what's going on? Because I think the TPO profile for me has a lot more resolution and depth to it. We have the initial balance. We have the single prints. We have, TPOs. Or do we have 1, 2, 3 TPOs per row? That's detailed. You don't generally have in volume profile. But on a big time frame, you can easily see where the low volume node areas are. And even if I go back further in time, you will see that the low volume node still remains between sort of 529.30 and 549 ballpark. So this little gap, it kind of looks like a cave. It's like if this is a valley, you're kind of going along. It's like, ooh, there's a cave. Let's go in there. I just wonder whether I can find a cave in the emojis to illustrate this better. We had a palm tree before for consolidations. Why do they not have a search function? This is terrible. So I would like the emojis to have a search, because otherwise I'm going to be spending the best days of my life trying to find a cave. And with the bright lights, I don't think I'm gonna be successful. But yeah, cave, we try to get up to at least the edge of it, and then once it reverses once upon a touch, on the second and third touch, it usually takes the entirety of the cave. Cedric says, what kind of entry model do you use to enter into a trade at GEX levels? Same entry model for every asset. Yeah, pretty much. It is not, it's not asset dependent. You know, obviously there's a direction and the bias of the general product. So for example, if I'm trading crude oil and we have been falling, but then I don't know, let's say you have euro close that decides to reverse it, and then we hit GEX 2 or a gamma wall, I will be watching the price for a reversal and more shorts at that point, closer to settlement. Time of day is a big component. If something happens outside of the time of day that I know things happen statistically, probabilistically, and experientially, then it means it's a bad trade for me, because something is not lining up. You effectively don't have one of the conditions. But yeah, when it comes to GEX levels and actual entries, you know, what sort of environment do we have? What is the underlying trend? How does the daily chart look like? Are we distributing? Are we, you know, pushing higher? Are we reversing? Was there a distribution followed by a resolution to the opposite side? And that will give me more of an outlook of how the price is going to behave. So it looks like gold wants to unwind here, but again, I'm not jumping into that. Whenever people sort of jump into trades, I usually find that they are NQ traders who are so used to momentum. So even a momentary momentum that kind of takes you lower or higher, they still are able to get like 100 ticks out of it. But on most other products, if you start to get involved in breakouts, especially commodities, you will find that you might have like 30 ticks before it smacks you back in the face. So this is why I say sometimes if I'm looking at anyone, how, not everybody obviously, but slightly more novice people, how they trade NASDAQ, they just trade in such a nervous way. And it's all like, oh, I'm in. Oh, I'm out. It's like, was that 10-second Tom? Christ. 51st Dates reference, if you've ever watched that movie. With Adam Sandler and Drew Barrymore and Robert? What's his name? Schneider? Richard Schneider. Is it? I don't know. The guy who played Ula. But yeah, to me that was always very funny. It's like, if you have seen the movie, that the character 10-second Tom has a brain injury and he can't retain memory past 10 seconds. So he goes, "Hi, I'm Tom." And then the rest of them are like, "Yeah, hi, how are you?" And he's like, "Oh, where am I?" It's like, "Well, you're in a hospital. You had a terrible hunting accident." "Oh my God, that's terrible." And the doctor says, "Don't worry, you'll totally get over it in about 10 seconds. And suddenly you see, "Hi, I'm Tom." So that's kind of how I feel that certain people trade. But yeah, it's not necessarily a bad thing. I just find that there's a nervousness to it that kind of makes me nervous as well. And I just find it entertaining. So yeah. Mohammed says, Coach D, can you please advise what is GEX and Gamma? GEX stands for Gamma Exposure. Those are areas of more contracts sitting at particular prices in the options chain. So it's basically where people are interested in either doing calls or puts, if you know anything about options. But obviously the ones that have less activity, they are important especially for market making and hedging activities. So they're not as important as the big sort of gamma walls and the big largest puts and largest calls areas. But they are pretty important for sort of, how would I put that? So if the market goes into a rally and runs into one of these smaller gamma exposure levels, market makers use that to hedge against it. So this is why you see a run up to a particular price point and then wow, comes back all the way down. And you're like, but it was breaking out. It's like, yeah, because X2, that's all market makers do. They will, on normal days, usually in what we call a positive gamma environment, which is a lower volatility environment. So it's not a directional thing. It's not like, oh, positive gamma, we're going up. No, it has nothing to do with direction and everything to do with just literally going, okay, positive gamma, that means that the market is not crazy and it's not super volatile. So we expect any open interest options level to be a bit of a roadblock. Does that make sense? I'm trying to simplify it as much as possible. Trader Can says, did I hear an NQ trader calling where's a trade to take? Not on this stream. If I look at anything equities wise, it's going to be YM. And obviously DAX if we ever get it. But yeah, so, and in fact, let's have a look at YM. Where is my YM? I usually pay for YM and I don't see it. This is my live account. We can't look at YM because for some reason it ain't there. Oh, maybe I know what happened. I'm gonna have to get in touch with the risk team for this because I should have YM on there, but I don't. And I think when they went to cover some of our most traded products, maybe they're just covering it for COMEX and then I pay for NYMEX, but I also wanted to pay for CBOT because I do power hour stuff sometimes. Interesting. Okay. I can't show you YM on my live. Maybe if I go into a combine, we can have a look. But yeah, NQ, these days I just can't stand it still to this day. Even on a range day, it's still like so twitchy and it constantly looks like it's having a seizure. I'm too old for that. Right, let me have a look at whether some questions are there. So, Irish Growth Trader, what time does COMEX sessions start from and to in Eastern time? Okay, I'm gonna have to use the time zone conversion. So give me 1 second. So I'm gonna do my time and then I'm gonna do EST and then I can tell you very easily. All right, so start time. The old pit start time, which is still considered COMEX start time, used to be 8:20 in Eastern time. Now, not very many platforms will allow you to actually start the calculations on 20 minutes past. Usually it has to be either 0, 15, or 30. So it sort of became a thing that COMEX really starts around 8:30. And that's usually when I see that fake out, head fake move. Because usually what happens on COMEX for the first 30 minutes, it goes the wrong way on a vast majority of days. So if you're aiming for a scalp, that can be definitely something. But usually they go the wrong way for 30 minutes. And then after that, it finally turns around. Now, for my calculation of the profile, I actually take the full day. So I run it all the way till till the end of the day, which is 4 p.m. your time. But just mind the fact that on some days, on a lot of the days, the volume will already die out at the old pit settlement time. So effectively, COMEX ends at 1:30 p.m. Eastern. After that, it's on some days it carries on moving, which is why I've extended my time. And even if it doesn't move much, that's still going to be calculated into the same value area. But when it does move, for me, it means that my code is going to pick up the rest of the value as well that happened after hours, so to speak. Mohammed says, where would I consider sells on gold? So I talked about that in here. Breakout to the downside, pull back to value low or VWAP, because the idea is that if this carries on falling, value low is not going to move. Value low is a static thing from yesterday's trading, the distribution curve, right? So that's not going to move. But VWAP is a volatility measure. So it's like it keeps going. It's a volume weighted average price. So as it falls, it sort of gives you a new reference point. Therefore, if you're looking for a pullback to get into a short, that's what I will be looking for. So it's going to be a while, you know, the way the chart looks right now. But we have to be patient. You know, you've got to be patient. It's not about sitting down and just clickety click, clickety click. I know this is tradertainment, but, you know, I am in a live account, so I can't just go like, we can do clickety click in a combine. If you want, I can switch. But I ain't doing clickety click bullshit trades on my live account. Not today, anyways. Pete the Process Parrot agrees with that. He just gave me that peck because I suggested that we do clickety click trades. I mean, really, he's pretty particular in what he wants to do. You know, he's very mean. Pete, don't mess with Pete the Process Parrot. He doesn't take it lightly. It's very painful. So yeah, that beak of his. Flash Golden says it's like using the volume profile, except you see real-time fluctuation in orders. Yeah, thank you. Thanks for answering that. Omar Cruz says, D, what do I get if I pay for the add-on for level 2 for Dome? If I were to pay for it, how would I implement it into my trades? Can you explain how to use it too? So Shay says, Pete's back. Yes. I actually want to get a grasshopper hand puppet. I think that would be quite funny. We need a name for it. This one I think was named by Coach Hope. I was like, what do I name it? And he goes, Pete the Process Parrot. And I was like, yeah. Awesome. So Omar, you just get the level 2. So you literally just get more prices. Now, do you need it? Probably not. Like, it depends on whether you want to turn your trading to order flow more. Like, I've been introduced to order flow and been trading a form of order flow for probably all 18 years, you know, market generated information, working not with a lagging indicator and kind of, oh, it's on MACD. I don't do that. I literally go, what is the formation of the supply and demand? That's order flow as well. Like, yes, it's on the chart, but it was created by the institutional order flow. And then some things like the exhaustion levels around the range extremes that get smashed and then they effectively get pulled back into the range. That's all order flow as well, because you have this thing called the sweep, usually under, and you can see it on Bookmap, there's a sweep indicator where they very quickly go underneath the reference point and then very quickly pull it back up. So you can see those, but you don't get Bookmap with just simple level 2. You just get time and sales. So you do get to look at time and sales, which I personally, I sometimes have it on the charts, but I do find it a little bit cancerous. especially now at my age. I used to stare at it a lot more when I was younger, but I don't know, Bookmap is just so much easier on my eyes. I can also increase the bubbles and, you know, do things that are not making my eyes bleed. That's always a good thing. And yeah, so you get real-time orders coming through, and there are strategies that are only dome related. So we had someone, whether it was yesterday or last week, who, well, oh no, hold on, that was the VIP. So they are very short-term traders, and they are a short-term trader, but they do it through charts. So I suggested them, if they just want to do such tiny trades, that they should look at maybe trading dome and starting all over again, because it wasn't really working for them. But what the old school traders were doing is to look at the imbalances on the tape and then trade up to and slightly past that level to effectively be the role of a market maker that will actively buy and sell up to certain points of deep liquidity. And then if it's a big liquidity block, meaning you have, let me see if I can get something that has more, maybe crude oil, because that has more price points. And if the order blocks, because remember, every time you have more orders anywhere, that represents some sort of congestion, right? So if it's just one price point, that's actually pretty easy to take out with a slightly bigger order. And a lot of the market makers will try to do that as well. Sometimes you see something that's been sort of going in a range, and then nothing's happening. And then on the dome, let's say you see a big order of like 90 contracts at 62.87. And then suddenly, at one point, you can't tell when, but somebody comes in and goes whoosh, and then they take that singular price point with one big order. Or maybe a few as well, you know, but it has to be done in a quick succession in order to be successful in running over the big order that was there. And they effectively take their liquidity. That's why, you know, we joke, oh, when you become the liquidity. It's like, yeah, when your stop loss is at a weird place and the market makers grab it from you. But yeah, there are entire strategies that only ever look at time and sales. They look at the dome inefficiencies. And there are a couple of things to note. If it's a singular price point where there's a lot of contracts, like for example, the one at 62.45, that is a liquidity pull. So draw on liquidity, what the cool kids are saying now. But it's basically a deeper liquidity pull. However, it's not that deep because it's just a singular price point. But what would happen if we suddenly start getting 169 at 62.45? Then you get another 100 at 62.44. And then you get another 90 at 62.43. Then you get another 180 at 62.42. That represents an order block. Now, some of the people out there who are like ICT followers, you're like, oh, it's an order block. Like, what is an order block? Just like you looking at the chart and going, well, that's where the high was. Like, that's not an order block. The order block, true order block in the order flow is when you have literally several price points with a lot of orders. That becomes very difficult to break with like a singular order, and therefore that is a congestion area. So instead of trying to take all of them out, maybe you can wait until the price gets there, maybe dips a little bit to take out a few orders here and there, and then you can trade from that area. So very similar, like in my eyes, it's actually the same thing that we're doing on the charts to a degree, only with an in-depth look of where the current market participants are positioned. Where do they want to get involved? You can see them on the dome. If you find that that's something that you would like to learn, and if you're struggling with your current approach, maybe you can explore that. If you're not struggling with your current approach and you're actually doing pretty well with your current approach, you're taking payouts, most times you're behaving yourself, don't change anything so drastically, because introducing dome and time and sales will change everything drastically. So don't throw out the baby with the bathwater if something is working for you already. But maybe if it's not working, whatever you're doing right now, maybe consider whether that sort of scalping just looking at the dome and time and sales could be something you can add into your system. And honestly, I don't really know why people scalp from charts. That never made sense to me. I can see why people would scalp through the dome, because I used to do it as well. I used to try to do it. But it was just horrendously stressful for me because it's one of those strategies that keeps you stuck to the dome. I don't like that. I like to enter my trade, go about my day, and just do whatever, and then, you know, I come back, I'm either in profit or I'm not. And, you know, most days, you know, they will be pretty good because I run a trade for several hours, and that brings me 100, 120, 200 ticks. So very little work for maximum gain. Whereas scalping, to me, it's kind of like another prison. You know, I never worked really 9 to 5. I worked 8 till 10. It's like 8 a.m. till 10 p.m. and sometimes even longer. So most of my jobs that I've had, I was a session musician before. That doesn't really have office hours anyways. In fact, it's graveyard shift most of the time. I worked as a prop trader. No, those were the longer hours. I worked as an IT recruiter. That was also longer hours. It was never a 9 to 5. And obviously I have my own companies. That's definitely not a 9 to 5. That's like 16 hours, 18 hours, and you just, you know, have to keep doing stuff. Unfortunately, I'm unable to do that right now because of a health condition that I'm still struggling with 4 years on. Hoping it will get better, but there are no real treatments for what I have. So, you know, I just have to kind of manage myself and hope that miraculously I somehow get better. But yeah, so I can't quite do the long hours. I still do 8 hours. And to me, that's short. I don't know if that makes any sense. It's like me being used to working, you know, 12, 16, 18-hour days. To me, an 8-hour day is actually like a godsend. It's like, whoa, there's nothing. However, I still don't like to sit in front of the charts for all 8 hours. You know, I want to actively look for trades for about 90 minutes to maybe a couple of hours. Then if I locate a trade, I will stay in on it for however long it needs to be, or give it a chance to really do what it has to do. Maybe if not for this day trading time zone, maybe in the next one. But you know, my day trading time zones are, let's say the first one is around midday, slightly before when LME starts. Then the next one is after my 3 p.m. And then the next one is after my 6 p.m. So if I enter a position at, let's say, around 3 p.m., but there's nothing going on, like the move that I was expecting doesn't happen, I will absolutely wait until the next day trading time zone in an open position. And to me, that's not exposure. To me, that's just giving the trade time to do what it needs to. Whereas most people will be like, oh, you've got 30 ticks, why didn't you take that? Because if I take 30 ticks, that does absolutely nothing for my overall P&L over very long periods of time. So I want to take the trades and commit to the risk of the trade that I'm in, regardless of my opinion of how long that should take. If it happens in an hour, brilliant. If it doesn't happen in an hour, I can actually wait. But there are certain caveats to that. Like if I'm in a failed auction, for example, and it's just not, it's a shorter term trade, it should be done within a couple of hours, ideally 45 minutes after I enter. If it isn't, after the next day trading time zone cutoff, I will actually stop the trade. So it will still be like a 90-minute trade to give it some time, but it's just not going to be like nervous trading, right? Every time I'm doing nervous trading, I recognize it and I'm like, I shouldn't be doing this. I'm doing nervous trading. Stop it. Pete the process parrot is going to pack me and to go, meh, meh, meh. What are you doing? Meh, relax. Take a beta blocker. Chill out. So yeah, if you have problems with patience, and it's a weird one because patience, I believe, is the job description for the trader. So it's like, imagine somebody going, you know, I want to be a long distance runner and I want to get to the Olympics, but I don't like running long distance. It's like, then what are you doing here? Why aren't you somewhere else? You know, so it's just, To me, I've never, even for scalping, you need patience, even more patience than what I do, okay? Because you have to sit there and watch the bloody thing for hours until your setup comes. The best scalpers that I know are some of the most selective people. They are never grasshoppers. They're never like doing, nonsense trades all day or every day. They will always be looking for a particular thing that might happen multiple times a day, but they will not be executing, 500 trades per day on an impulse. And in fact, the ones who are manual scalpers still stick to 3 to 5 trades per day. They take less. They take maybe 10, 20 points, 30 points, and they're out. But they're extremely selective over what they want to see. And that is the difference, I think, between pros and retail. Retail think that scalping is clicking buttons until your fingers bleed, until your eyes bleed, until your brain bleeds, you get a brain aneurysm or something. That's not scalping. That means that you're doing something impulsively that is taxing your entire body. And at some point, that stress and whatever you're doing to yourself will show up as health issues when you're older. So don't do that, Develop selectivity, develop patience, regardless of your style. I know what works for me, and I know that scalping is not for me because I can't sleep. My head hurts all the time. It's just not for me anymore. I used to be quicker when I was younger, and I used to do, between 8 to 12 trades per day, but it was on different products. So I would just finish with one product, then go to the next one, go to the next one. As I got older, that became much more difficult, especially in the last sort of 4 years. And I would say last 2 years, I've noticed some changes. And it's just how it is. We all get older. Nobody can escape the hands of time. Andre says, came in a little later, D. What do you think about this gold? If it's going to keep dropping? I don't know if it's going to keep dropping. Like, if I knew that, I would, I don't know, write a bot that scans the crystal ball or something. So this is my thoughts on gold. So breakout to the downside, which we're seeing now. I want to see either the pullback to COMEX value low or to VWAP, which is going to track lower as the day goes by if we continue to fall. So whenever we get a slowdown and then a pop, because not nothing, but very rarely do things go down in a single direction. There's always ebb and flow to the market, even if it's intra-candle, right? You can look at a 30-minute chart and they will sometimes pull all the way back up. Well, maybe they touch VWAP as they do that. So that's what I'm looking for. But I'm not really itching to get involved into this sort of pullback. I mean, what do you do with your risk? Nothing, right? Where do I limit risk? Where is structure here? There's no structure. Until that changes, I'm just sitting on my hands. And yes, I know some people don't like it, and they will be here and go, never trade. Yeah, because I'm selective. Yes, I don't click buttons just randomly. If there is a pullback of some sort, if we get to somewhere, I'll execute a trade, but I have no levels at the moment. So we're just sitting and observing. Andres, that's not, Andres, that's not directed at you. It's directed at somebody else who's complaining. I think it was last week. Zariorus, probably butchering your name, I apologize, says, you sound like my girlfriend and she is in profit. That's the worst part. Why is it the worst part? You should applaud that. It means that she's done work on herself, and maybe you should follow suit. Yeah, I have very little sympathy for people who are like, yeah, I'm not doing what person in profit is doing, but I'm complaining about it, and she is in profit is the worst. It's like, it's not the worst. Celebrate her success. But yeah, women generally have a better way of dealing with our emotions. I know there's this stigma how women are more emotional. But I can tell you that the women that go into this line of work, we're not your normal everyday woman who's going to break down every time somebody shouts at her. We are a lot more, let's say we have bigger risk appetites and we are perfectly able to deal with the male environment and even excel in that environment. I never have particular issues with frat boy jokes or with non-PC conversations that used to happen in prop firms. And trust me, a lot of them are very, very inappropriate. And I just think it's funny, right? So I would usually get involved. And if you see me in chat, sometimes I will, you know, break a dirty joke or so. I try not to. Just sometimes you just have to. It's just how it is. You have to. Trader X says, Coach D, I changed to trading GC only and getting consistent payouts. Amazing. Do you know how happy I am to hear that? Because that's the point. Like, doesn't matter whether you're going to trade NQ or GC. So if NQ is harming you, move away from the damn thing, you know? And GC, you know how many people have said this to me? So many people. Every time I move somebody away from NQ and I put them onto a product that actually follows levels and behaves itself, suddenly they start seeing the light at the end of the tunnel. So if the whole point is profits and NQ is not getting you that, change nothing and nothing changes, right? So if you're brave enough to grapple with another new product, look at it as an experience, look at it as a challenge, but you will be pleasantly surprised how much more rewarding GC is for less amount of stress. Copper as well when it's moving, but copper is a commodity, so it has, you know, times of the year when it really doesn't move all that much. So you have to kind of be a little bit more experienced of when to get involved with it and when not to. Typically, you're in and around CPI days and on CPI and PPI days. That will be a good one. Yeah. Zariora says, I am pretty. Well, I'm not an ug bug. I know that. Am I pretty? I don't know. I don't really look at myself that way. First of all, I'm like 5'1", so height was never my big feature. And where I come from, if you didn't have the height, you automatically were not that attractive, because all the women there are like at least 5'7" and more. So I was like a little tiny D, you know. So I had to develop personality, which is, you know, why I'm the way I am. Yeah. Anyways, let's move on from that topic. But yeah, I suppose I grew into my looks eventually. So it was my mid 30s. I don't like talking about my looks, but thank you. It's I'm just gonna take the compliment and move on from that. Yeah. Trader Can says, yeah, cortisol shot up, but it's less about trading, finding out. It's less when payout is a trigger. Yeah. Trader X says, GC I will buy 200, simple moving average on a 30-minute chart. Yeah, that's a good system. Trader Can says, 500. Cheryl says, I'm 4'11". Wow. I know a Colombian girl who's 4'11". She is, like, I'm scared of her, man. She is so feisty. That doesn't matter that she's so small, because she's even smaller than I am, which doesn't happen often. Usually I'm the smallest person in the room. But yeah, so I met, her name is Fabiana, and when Fabiana is like angry, don't mess with Bobby. So, yeah. My dad was not a tall man. He was like 5'6", and he always said, yeah, you know, poison is also in small bottles. That used to be his response whenever somebody brought up his height. So that's definitely true for Fabi. I think I have a bit of a streak as well, because I'm, you know, you've got to compensate somehow. You know, if you have people who are super skinny and then they go into bodybuilding and then they become huge. That's compensating. And those of us who are short and, you know, we don't have the height and the physical presence, I, you know, compensated with humor. I compensated with intelligence that I luckily was gifted with. But yeah, so I suppose eventually I got okay with the way I look, and I do think it had everything to do with the fact that I looked like a child, really up until I was about 37. People thought I was like 19, 20. And when I was in my 20s, people thought I was 12, which was very painful. I would try to buy some wine. I was like 27 years old. And I went into a shop, forgot my driver's license, because that's the only ID in the UK at the moment, even though that could change. And I wanted to buy some wine, you know, so I went up to the till, and she goes, "Do you have any ID?" And I was like, "Not today." She was like, "I'm sorry. I can't say this." Like, come on, really? So that used to annoy me a lot. But then eventually, I think I'm at least looking like I'm in, you know, early 30s now, which is godsend. I'm mid-40s, by the way. Because again, people get a bit confused as to how I can be trading for 18 years and I'm only, you know, everybody thinks I'm like 27 or something. So I see comments when I say, yeah, you know, nearly 2 decades of doing this. And they're like, yeah, Dee started when she was 4. I'm like, yeah, because it's a good age. Yeah, GC leg down. We're not chasing. Chasing gets you in trouble. Where's the bun? Chasing gets you... Actually, let's have a look at energies. Maybe we find some interesting developments in RBOB or heating oil. So why don't we get ready for the day? Let's recycle copper, because I don't know what copper is doing right now. It's kind of slow and not really following... Not really following what the other guys are doing. All right, first things first, daily chart, weekly chart. We know that there was a range high. Weekly range high. We reversed from there, obviously. That was my suspicion. Didn't trade it actively, just I know that we reversed. We're coming into the bottom range of the localized weekly range. So that could be interesting. But it is a smaller, closer range. There's another bigger one on an even larger time frame. Whenever I see ranges, even on the daily chart, I more often than not would like to see them grabbed. A gravity grab on a range. But this is the low of that range. But 300 ticks down, 250. So plenty of space. I wouldn't want to be exactly short into these levels. So maybe if we get some sort of a pullback. Let me see what GEX levels are. It's updating. Just give me a chance. All right, so it's kind of got into a negative gamma environment. All the major GEX levels are higher up. So look at average daily range. I'm not going to do it as detailed of, you know, all the levels because I have them on my other chart, but let's just see. So the average daily range exhaustion point today is closer to 64, really. And that's what GEX2 is. So I wouldn't be surprised if this goes all the way to GEX2. There is an HVL from the 0 DTEs, so a gamma flip area. Yeah, so I would want to see a pretty decent run up to the exhaustion point and then to short RBOB, but I'm using crude oil levels for it. Heating oil, I think it's a little bit stronger than both of these. And if I look at heating oil levels, and I know you guys are like, what? Heating oil? Unless you've been here daily, then you know that I will mention it every so often. Where's the heating oil chart? Where's the chart? Hold on. I've got to load up the template. It's not going to take long. Okay. All right, so average daily range on heating oil is 235.6. So all the way up here. And heating oil, I don't think I have any options levels for it, but I can try and convert crude oil levels because they're so correlated. However, regardless of that, I will always look at CL levels and then either pick RBOB or HO to express that. And be aware that heating oil is super thin. So sometimes if you are trying to trade in this environment, it's better not to. So I will wait for NYMEX to open and for the dome to actually populate. And then I'll be able to maybe execute like one. And I think that heating oil is $4.20. So it's a little cheaper, but it's very volatile as well. Nice though. Once it moves, it's a doll. I love it. But yeah, it's just the fact that it's so thin, you can't really trade a lot of size on it. RBOB, you can trade a little bit more size, especially during regular trading hours. And however you want to analyze RBOB, you cannot really analyze it without actually analyzing crude oil as well, because it's just not. It's not an isolated product. There's a thing called the crack spread. I talked about it before. It's a very particular ratio or a spread between crude oil, RBOB, and heating oil. There used to be like entire companies that used to do this. Let's have a look at natural gas since we're on the topic of energies. Natural gas is starting to kick up some demand, right? This put support is from 1 million years ago, probably. So let's have a look. Where am I? It's just around the HVL. And we're kind of jammed in between the longer dated HVL and the 0DTs. I don't really like that. But let's say that we get a bit of a pullback down. There's a GEX1 at 320. There is an exhaustion level, so ADR, at 315. So if we get to 315 and we start to track higher, that would be something to consider. London has extended upside. Yeah, so maybe it's time to start buying natural gas. I would still like to see at least a test of 320. Why? Because we also have, if you look at the daily chart and you really analyze it, there is a little rally-based rally here. So that means a test of that market point shift would be on the cards. And at the moment, we still have this pesky range here at 340 on this new contract. But yeah, once we clear that, there is a bit of space, even on the volume profile, at least up to 370. So that could be interesting. We just need natural gas to actually go into its crazy self, because natural gas, when it's not being the widowmaker, it's a little bit boring sometimes. But then cold weather comes, especially in the Midwest, and then it just starts to kick up in demand. And that is what I'm going to wait for. I don't know whether that will be October, November. Definite seasonality to natural gas. But yeah, energies might be looking pretty interesting. Trader Can says, wait, which commodities will yield faster return to pass the combine? Copper or any if the order is on the right side? Gold is probably your best bet for that, because it has the largest range out of all of them, and it stays like gold. If you look at all of the commodities, gold for some reason doesn't really suffer much from like seasonality dry up. It literally just kind of goes through pretty decent liquidity nearly year round. Summertime doesn't really affect it. Everything else, because it dries a death, dies a death and dries down. Gold is like, I'm going to keep going at like 280, 300 ticks per day average. It's like, okay. So, if you are, but again, the statement of pass a combine quicker, that sort of like just goes into my, like a knife in my chest. Because whenever I hear that, the only thing I hear is that, well, you're not in an X of A or blew it up. And now you're just looking to get back to the funded level without tackling the issues that maybe cause you to lose the X of A. So that's where I'm like, let's not rush. But, if you are somebody who has taken payouts and it's just like one of those things, let's just add another combine, I would still just go with the type of a day. Like if the day brings you lots of ticks, you can pass it very quickly. But yeah, if you're just looking for an overall product that moves a lot, GC out of all of the commodities will probably give you that most consistently throughout the year. Because gold is more likely to go crazy in volatility than it is to die down. Yeah, so let's keep that rushing in mind. So don't rush. Don't rush. Cardi is asking me, where do I get my GEX levels? I get them from a company called MentorQ. So if you go to my channel, the last long form video that I did on my channel, which is kindly put by Topstep underneath this video, so Marcus Talker D channel, you will see a full video, quite engaging, funny, only 10 minutes long, that explains how I use them, and also in the description you will see where I get my GEX levels, but it's from MentorQ basically. Trader Ken says, yes, sorry for the quick issue. The issue was a dual system error and human error. Yeah. Sorry for a quiet room. Okay. Patrick Cook, caught that nice short on gold and silver. Cool. If it's a part of your plan, awesome. That's lovely. Trader Ken says, not rushing, trying to get a groove back with $500 a day before sprinting. Well, if consistency and longevity is your goal, then the sprinting part is purely sizing up as the account balance grows slowly. So have some way to figure out the point. I like to use value at risk for that. And then I look at what I would need because what value at risk is, it's really a worst case scenario, right? If you were on the wrong side of the biggest day that gold had in the last 6 months, how much money would you need to have had in the account and not blow it in order to stay in for the entire day as the price went against you? That's the value at risk. Yeah, in like the most simplest terms. And it's actually a pretty good benchmark for how much you should be risking, you know. And I know most people will be quite shocked to know that it's not 1 GC or 5 GC. It's usually going to be like 2 to 3 micros on gold. That's the safe way to go about it. Grow the account, keep it for long periods of time, and never jeopardize the balance, even if you're in a drawdown period. Because the drawdown, even if it's extended, should only be, you know, not a terrible amount, even though I am more aggressive on prop accounts, I will be honest. So I go value at risk, and then I sort of double the position size. That's how I look at it. So if, for example, let's say that I would need, you know, 2,000 to withstand the biggest day on gold, I would, on 1 micro, I would still trade 2, even if there's like a 2K buffer in there. So, but yeah, that's where prop accounts, you can be a little bit more risky. But some people, my risky and their risky, I found that it's quite different. Anyways, we're at time, guys. So that is it. No trades yet for me. Just waiting to see what this gold is going to do. It looks like for now it found a bit of a temporary relief from this big smash down. The volume was increasing for a while. Now it's decreasing. And I'm just looking at it from a bird's eye view on a 30-minute chart. So I am just looking for that pullback at some point of the day. Otherwise, I might focus on something else. I might focus on energies. I might focus on copper, even though copper doesn't look that great today. But we'll see. Maybe it'll liven up the closer we come to LME. Anyways, that is going to be it from me and Pete the Process Parrot. So hopefully you found my writing of the hypothesis useful. I think we're going to keep the old time for now, but I don't know what's going on there, so we'll find out. You'll find out when I find out. Let's put it that way. But yeah, anyways, that is it from me for the Euro trade for now. Me and Pete wish you a good trading day, and I will see you again tomorrow, probably for the old time again. This was the Euro trade. I'm Marcus Stoker D. This is Pete the Process Parrot. Have a great day.